Warren Buffett's wealth strategy, turning $1 into $10. I'm going to show you how a kid turned $114 into over $100 billion. In 1942, an 11-year-old Warren Buffett bought 3 stocks. They went up a tiny bit and he sold them for a small profit, thinking he was a genius. But then, he watched in horror as the stock exploded 300% without him. That one mistake, selling too early, gave him a lesson that literally made him one of the richest people on the planet. And today, I'm going to show you the exact math he used to turn $1 into $10 over and over again. This requires zero complex algorithms or lottery tickets. It's a secret that anyone can use. That kid from Omaha never forgot the pain of losing all that money. He became a hustler, delivering newspapers, buying pinball machines, and stuffing every single dollar he made into a box. By 15, he had saved up what would be $30,000 in today's money. But the biggest moment of his life came when he found a dusty old book called The Intelligent Investor. I'm going to tell you the secret from page 42 right now. Buy a business for less than it's truly worth, then wait. The simple translation? Pay 50 cents for something you know is worth $1, and then do absolutely nothing for a very, very long time. This single idea is the foundation for every dollar he has ever made. Buffett has 2 rules that made him billions. Rule #1, never lose money. And rule #2, never forget rule #1. This sounds simple, but it's actually an insane mathematical advantage. If you lose 50% of your money, you don't need to make 50% to get it back. You need to make a 100% return just to get back to zero. It's an impossible climb. So he created a filter that rejects 99% of stocks. He only looks for businesses with huge competitive advantages, insane cash flow, almost no debt, and managers who treat shareholders like owners. In 1988, he found Coca-Cola. He paid what seemed like a fair price and then sat on his hands for 36 years. Today, the dividend check he gets every 3 months is bigger than the entire amount he originally invested. That is literally turning $1 into 10 over and over again. Warren Buffett refuses to invest in things he doesn't understand. He draws a tiny circle around businesses he can explain to a 12-year-old in 1 sentence. If he needs a crazy spreadsheet to understand a deal, he's out. In 1999, during the tech boom, Wall Street literally laughed at him for not buying .com stocks. He stayed in his circle, investing in candy, razors, and soda, while everything else went to the moon. And when the crash came and everyone else went broke, he didn't panic. He just bought more of what he already understood at gigantic discounts. The lesson is insane. You don't need 20 brilliant ideas to get rich. You only need 2 or 3 that you know better than anyone else on earth. Imagine I offered to sell you a giant mansion, but you only had to pay the price of a tiny tool shed. You would take that deal every single time. That massive gap between the price and the real value is the margin of safety. Buffett demands this on every investment because the future is impossible to predict. If he's wrong about a company, the super low price he paid acts like a giant airbag that saves him from losing. For example, in 1965, he bought a failing company called Berkshire Hathaway. The business was dying, but hidden inside the company was a giant pile of cash and real estate that was worth more than he paid for the entire thing. The company eventually died, but he used that leftover cash to build the $500 billion empire we see today. It's a simple strategy. Heads, you win big. Tails, you don't lose at all. His partner, Charlie Munger, gave him the most important advice of his life. Stop buying crap companies at wonderful prices. Instead, buy wonderful companies at fair prices, and then just hold them. So Buffett listened. He stopped chasing quick profits, and just let his investments grow. He reinvested every dividend, bought more shares, and let compounding do all the work for him. And here is the most insane statistic of this entire video. 96% of Warren Buffett's net worth was earned after his 65th birthday. It wasn't because he got smarter. It was because time and reinvesting act like rocket fuel. A single dollar compounding at 20% a year becomes $10 in 13 years, $125, and $1,000 in just 37. The only hard part is having the patience to not touch it. Most people treat stocks like lottery tickets, but Buffett sees them as businesses. When the market crashes and everyone is panicking, he goes shopping for bargains. When the market is soaring and everyone is celebrating, he gets bored. His real superpower is using the market's own emotions against it. He imagines a crazy neighbor named Mr. Market, who shows up every day offering to buy or sell stocks at insane prices. Some days Mr. Market is euphoric and offers to buy at triple the real value. Other days he's terrified and will sell to you for a 50% discount. Buffett just calmly says, "No thank you," or "Yes, I will happily take that discount." He wins every time because he knows that emotion is the ultimate enemy of making money. This is going to blow your mind. Buffett still lives in the same house he bought for $31,500 in 1958. He eats breakfast at McDonald's and drinks cherry Coke. This isn't because he's cheap. It's because he sees every dollar not spent on a fancy car or a new watch as another soldier he can send out to make him more money. Now think about the opposite. People who make a lot of money but lease expensive cars and have massive credit card debt at 19% interest. They are literally destroying the money that could be making them rich. Buffett's solution is simple. Keep your living costs super low while your investment income grows exponentially. Eventually, the gap between what you spend and what you earn gets so big that you never have to work again. If this simple way of thinking is blowing your mind, do me a favor and destroy that like button. It tells the algorithm to show this video to one more person who needs to see it, instead of another crypto scam. Your support is everything. Let's go deeper on the Coca-Cola investment because this is crazy. In 1988, Coca-Cola was selling for a cheap price, making a 15% return, and shipping its product to every country on Earth. Buffett dropped $1 billion on the stock, which was an insane amount of money back then, and then he did nothing. He never sold. The dividends started small, then they doubled again and again. Today, Berkshire Hathaway collects $700 million in dividends per year from that one investment. That's more than what he originally paid for the whole thing. If you had invested just $1 with him in 1988, it would be worth over $25 today, not even counting the river of cash dividends. This isn't magic, it's the blueprint. Buy a wonderful business, sit on it forever, and get paid while you sleep. Every financial advisor tells you to own 50 different stocks. Buffett calls this diversification and says it's a terrible idea. He runs a super concentrated portfolio where just a few investments make up almost everything. His logic is simple. If you found a literal gold mine, why would you distract yourself by buying a bunch of mediocre silver mines? This intense focus makes your wins huge. But here's the catch. You have to be willing to watch your portfolio crash without even flinching. You need diamond hands. If you can't handle that drama, then just buy a simple index fund. But if you have the patience to read and understand a business and stay calm when everyone else is panicking, concentration is the fastest legal way to turn $1 into 10. Here is the craziest part of it all. Buffett has published his entire strategy online for free for decades. All his secrets are right there for anyone to read. So why isn't everyone a billionaire? I'll tell you why. Because his strategy is boring. Patience is painful in a world of instant gratification and TikTok videos. The competitive edge isn't a secret. It's just doing something that feels uncomfortable. If you can just sit still for a decade and let amazing companies do their thing, you will beat 90% of professional investors and you'll pay 0 fees. The trick is to be the tortoise when everyone else is a rabbit on Red Bull, chasing the latest trend on Reddit. You do not need $1 billion to start this. You can start today, right now. Open a brokerage account with 0 fees, buy just one share of a company you actually love and understand, and turn on automatic dividend reinvestment. Then, schedule a monthly purchase of that same stock. After you do that, I challenge you to forget your password for 5 years. I'm serious. Whether you start with $100 or $100,000, the process is exactly the same. Buy value, add to it consistently, reinvest everything, and then wait. Time is the #1 ally of a great business. The sooner you start, the richer you'll get. I want to know what you think. Comment below with the one wonderful business you would hold for the next 10 years. Hit that subscribe button if you want more real financial wisdom instead of hype. And please share this video with someone who thinks you need to win the lottery to get rich. And for everyone who has made it to the end of this video, I want you to go to www.streamlinebusinesseye.com, http://www.streamlinebusinesseye.com right now. Don't wait. Buffett's whole strategy isn't a secret, it's just boring. But if you can embrace the boredom and play the long game, you can watch $1 turn into 10, then 100, and even more. It's a journey worth taking.